Picture this scenario because it is likely one you know intimately. It is a freezing Tuesday night in early July. The rain is lashing against the window, and you are sitting at your kitchen table, staring at the MyGov portal on your laptop. The glowing blue screen is reflecting off your tired eyes, while your latest AGL gas bill sits unpaid and demanding attention next to your half-empty coffee mug. You have just painstakingly clicked your way through the Australian Taxation Office Tax Estimator, quietly confident that this year, finally, you are going to get that decent chunk of cash back to clear your suffocating credit card debt and maybe, just maybe, get a fraction ahead on the relentless mortgage. But then the screen refreshes, the little loading circle finally stops spinning, and you see a number that makes your stomach instantly drop through the floorboards. $742. That is it. That is your entire refund after working your absolute guts out for 12 solid months, commuting on crowded, delayed trains in the freezing dark, skipping the expensive pub lunches with your colleagues, and watching the price of absolutely everything at Coles and Woolworths climb higher and higher every single week. You sit there in the quiet of your kitchen, feeling a sickening mix of hot anger and cold exhaustion, wondering how your mate, who earns exactly the same money as you just bragged at a barbecue about getting $4,000 back, while you are left holding what feels like literal spare change. If you have ever felt that crushing, suffocating disappointment looking at your notice of assessment from the tax office, I need you to listen to me very closely right now. You are not stupid, you are absolutely not failing at life, and you are far from alone in feeling this way. The cold, hard truth is that the Australian tax system was never designed to be intuitive, transparent, or fair for the average hard-working wage earner. We are currently operating in an unforgiving economic environment where inflation is silently and viciously eating away at your purchasing power. The skyrocketing cost of living is suffocating ordinary families, and a highly complex, heavily legislated tax structure actively works against you unless you know the specific rules and loopholes that wealthy Australians have been exploiting for decades. For your entire working life, you have been conditioned by society to believe that doing your taxes simply means ticking a few basic boxes, claiming your standard laundry expenses and blindly hoping the tax office takes pity on you. But that lingering feeling of being fundamentally shortchanged is completely justified. The entire system relies entirely on your exhaustion, your lack of free time, and your lack of specialized accounting knowledge to keep billions of dollars of your hard-earned money sitting safely in government's coffers instead of resting in your bank account where it rightfully belongs to protect your family. By the exact moment we finish our conversation today, you will possess a complete, step-by-step, unshakable understanding of exactly how to legally and ethically extract every single dollar you are owed from the government this year. We are going to completely transform that deeply disappointing few $100s into a return of thousands. I am going to show you the precise, proven strategies and the specific hidden deductions that will maximize your 2025 tax return. You will walk away with the exact knowledge required to put that cash directly back into your own hands, allowing you to finally break the cycle of financial anxiety and secure your footing. To truly understand why you are constantly feeling financially squeezed despite working harder than ever, we have to pull back the curtain and name the specific forces actively working against your progress in this country. The primary villain destroying your wealth is not your occasional spending on a coffee. It is the insidious force of bracket creep, engineered by an inflation rate that the Australian Bureau of Statistics confirms has relentlessly eroded your real wage growth, while simultaneously pushing you into higher tax brackets without delivering any actual increase in your living standards. When the Reserve Bank of Australia aggressively and repeatedly hiked the cash rate to battle inflation, your mortgage repayments absolutely skyrocketed, or your landlord callously passed those soaring interest costs directly onto your weekly rent in suburbs everywhere from Parramatta in Sydney to Fitzroy in Melbourne. Yet, while your everyday non-discretionary expenses exploded, the taxation office continued to tax your nominal income at aggressive rates designed for a completely different, outdated economic reality. Even with the heavily publicised Stage 3 tax cuts finally coming into effect, the sheer, deliberate complexity of the system is designed to defeat you. With convoluted Medicare Levy Surcharges punishing you, hidden Division 293 taxes silently penalising higher earners, and the quiet, unceremonious removal of the low and middle income tax offset, the government is quietly clawing back whatever minor relief they pretend to give you in the media. They want you confused and exhausted. They want you completely overwhelmed by the 50-page rulings on work from home deductions. Every single time you simply give up and lazily claim the standard shortcut method because you are too tired to calculate it properly, the tax office saves hundreds of millions of dollars collectively. That is your money funding their political surplus, but we are going to permanently change that power dynamic right now by walking through exactly how you take back control of your tax position, starting from the absolute basics and moving all the way up to the sophisticated strategies that usually cost thousands of dollars in professional accountant fees. Let us start at the ground level, looking at the everyday wage earner making $85,000 a year, perhaps working a demanding administrative job in Brisbane's central business district, or teaching in a crowded high school in Adelaide. At this level, you might wrongly assume you only have your basic union fees and a minor amount of stationery to claim, but you must critically consider the actual hidden cost of your professional life. Have you accurately calculated the heavy depreciation on the expensive laptop you were forced to buy when your company adopted a mandatory hybrid work model? Most Australians simply use the tax office's fixed rate method of 67 cents an hour for working from home, falsely believing it is the safest and easiest bet. But I have seen this tragedy happen time and time again when I looked at the numbers on this for my own closest friends. By switching to the actual cost method and properly, methodically apportioning your high-speed internet, your mobile phone data, and the dedicated home office electricity usage during those boiling hot February days when your air conditioning is blasting non-stop, that single deduction can dramatically jump from a measly few $100s to well over $1,000. You are already doing far better than you think just by questioning the default, lazy option the government hands you, and you are ahead of more people than you realize by taking the time to understand this fundamental shift. Now, let us confidently move further up the ladder to someone earning $120,000, perhaps a stressed mid-level corporate manager in Melbourne or a highly skilled specialist tradie, working exhausting hours across the sprawling outer suburbs of Perth. You are hitting that critical point where the tax office really starts to dig its sharp claws into your earnings. You are paying a highly significant amount of tax, and this is where the warning beat needs to hit you hard. The absolute biggest trap at this specific income level is carelessly neglecting proactive tax minimization because you feel too busy with your daily life, or you incorrectly assume those strategies are strictly reserved for the ultra-wealthy. If you do not have appropriate private hospital cover at this income, the government is unapologetically slapping you with the Medicare Levy Surcharge, literally taking 1 to 1.5% of your entire gross income and throwing it into a bureaucratic black hole. We are talking about $1,200 or more, completely and utterly wasted, with no benefit to your health or your wealth. But here is the highly empowering reality. If you deliberately redirect that exact same amount of money into making concessional contributions into your superannuation fund, you instantly reduce your taxable income while simultaneously building your own long-term wealth. Let us say you strategically drop $5,000 of your pre-tax income into your Australian Super or Host Plus account before the strict June 30 deadline. Because that money is only taxed at a concessional rate of 15% going into your super, rather than your punishing marginal tax rate of 37%, plus the standard Medicare levy, you are instantly legally saving over $1,000 in tax. That is a guaranteed, risk-free return on your money that you will absolutely never find trading speculative stocks on the Australian Securities Exchange or sitting in a dismal term deposit at the Commonwealth Bank. As we climb even further up this ladder, let us examine the busy household bringing in a combined $200,000, maybe desperately balancing an enormous mortgage in Sydney's affluent but expensive fringes, while paying off a rapidly depreciating 2019 Toyota Corolla. You feel incredibly affluent on paper, but your bleeding bank account tells a vastly different story of crippling childcare fees, and agonising $400 weekly grocery shops at Coles. This is precisely where you must aggressively look at your household income distribution. The Australian system deeply penalises single high earners far more than couples earning the exact same combined amount. If you hold investments, whether that is a modest, sensible portfolio of Vanguard exchange-traded funds or some legacy shares in BHP, and they are sitting entirely in the name of the higher-earning partner, you are actively bleeding cash. By simply and legally restructuring where those specific assets sit, shifting them intelligently to the partner in the significantly lower tax bracket, you can permanently save thousands of dollars every single year in capital gains and dividend taxes. It is not evasion, it is simply playing by the exact same established rulebook that every politician and chief executive officer in the country actively uses to endlessly protect their wealth. You are entirely capable of implementing these exact same robust structures for your own family's ultimate financial security. Now, I want you to completely erase absolutely everything you have ever been told about the glory of getting a massive tax refund, because here is the dark, counterintuitive truth that absolutely no one in the financial industry wants to admit to you. Getting a huge $5,000 tax refund is actually a glaring sign that you are failing terribly at managing your personal cash flow. If you get a giant check in August, you have absolutely not won the lottery. You have willingly given the Australian government a completely interest-free loan of your own money for an entire 12 months. During a brutal economic period where inflation was raging at over 4% and your variable mortgage was costing you upwards of 6%, you foolishly let the government hold on to your vital cash, while your own personal debts compounded heavily against you. The ultimate goal of a masterful, sophisticated tax strategy is absolutely not to get a giant, celebratory check at the end of the financial year. The true goal is to legally adjust your withholding tax throughout the year so that your final refund is as perfectly close to zero as possible. This means that your money was securely sitting in your own personal offset account, dramatically reducing your interest payments and diligently working for you every single day of the year instead of sitting in Canberra. The real reason so many intelligent Australians fall deeply into this specific trap is deeply rooted in our flawed financial psychology. We mistakenly treat the annual tax refund as a desperate forced savings plan because we fundamentally do not trust ourselves with our own money. It is the classic psychology of avoidance and the crippling scarcity mindset. We willingly allow the government to overtax us every week because we treat that eventual delayed refund as a massive dopamine hit, a sudden, exciting windfall that emotionally justifies a luxury holiday to Bali or a brand new, unnecessary couch from Harvey Norman. But relying on the government to act as your strict parent and arbitrarily enforce your savings habit is costing you dearly in lost opportunity and the undeniable magic of compounding interest. When you finally recognize this insidious behavioral trap, you realize that taking complete control of your tax withholdings and your legal deductions is not just about the underlying math, it is about finally respecting the sheer value of your own hard labor. Once you actively break free from the childish mindset that a tax refund is a bonus and you realize it is simply the delayed return of your own stolen wages, your entire approach transforms. Total awareness of this psychological trap is the absolute first vital step out of it. To make absolutely certain you never leave your own hard-earned money on the table ever again, there are exactly 3 specific, highly actionable steps you need to take this week to proactively prepare for your 2025 tax return. First, you must immediately log into your MyGov account, access your tax portal, and submit a pay-as-you-go withholding variation form if you have significant, highly predictable deductions like a negatively geared investment property or large charitable donations. This official document firmly tells your employer to quietly take less tax out of your weekly pay slip starting immediately, putting that vital cash straight into your pocket right now instead of waiting helplessly until next July. Second, you urgently need to open your superannuation funds application on your phone right now and locate your personal BPay details for voluntary, concessional contributions. Set up an automatic, recurring transfer from your main everyday bank account of even just $50 a week. By doing this steadily and quietly throughout the entire year, you completely avoid the stressful panic of trying to desperately find thousands of dollars for a lump sum contribution in the chaotic last week of June, and you systematically lower your taxable income every single month without even feeling the pinch in your daily lifestyle. Third, you must immediately stop using dusty shoeboxes or random, disorganized folders on your laptop desktop to track your paper receipts. Download the official tax office application directly to your smartphone today. Every single time you buy a piece of mandatory equipment for work, pay a professional industry subscription, or incur any legally deductible expense, take a clear photo in the application immediately using the built-in tool. It automatically uploads to your profile, ensuring you never lose a thermal receipt that fades in your car console, guaranteeing you meticulously claim every single cent you are legally entitled to receive back. The Australian tax system is a heavily guarded, incredibly complex fortress, built specifically to protect the wealth of those who understand its architecture, but your deliberate financial education is the master key that forces those heavy iron gates wide open for you and your family. If you want to confidently keep mastering the Australian financial system, alongside someone who actually wants you to win, subscribe to the channel right now and turn on your notifications.